Hello everyone, this is Dr. Mihir Shah once again with another video. In this video, we are going to solve November 2019 university question paper under the subject Direct Tax. This is the part 1 of our video series based on solving November 2019 question paper. Again, a very important video for all the TYBMS M5 students. So let us see which are the sums that we are going to solve in this particular video. Okay, question number 2 states that Ms. Ria has earned the following incomes. Compute her total income, the scope of total income based on resident and ordinary, resident but not an ordinary, and non-resident. They're giving you 8 entries. So we'll start one by one. Now, first is payment received in UK for services rendered in Korea. Both are foreign countries, so only the first person will be taxable. That is resident and ordinary resident. Income from agriculture in Bangladesh is a foreign income, so only the first will be considered. Dividend from German company received in India. If it is received in India, everyone pays for it. So it will be taxable under all heads. Interest earned and received in India. Again, India, everyone has to pay. Next, income from business in Japan, control from India. The word control, manage or set up from India. The first two categories of people will have to pay. Royalty received in Indian company, again Indian, everyone pays for it. Okay, rent from house in Kolkata. Kolkata is in India. Everyone pays for it. Keep the rules very simple. And untaxed past profit, it is exempted, so no one pays for it. That's it. After that, we just need to total it up. So the total of ROR comes to 14 lakh 10,000. For R, NOR comes 99 lakh 60,000. And for NR comes 7 lakh 10,000. Okay. So this was the very first question based on scope of total income. The rule is if it is India, everyone pays. Control from India, the first two category, foreign income, only the first category, past profit, no one pays for it, and agriculture from India, no one pays. That based on that rule, you can solve any kind of sum. Okay, I hope everyone have understood that. That was the first sum. Now we jump to the next part, the second sum. Miss Anjali Kapoor is a physically disabled person with 60% disability. She gives you the information for the previous year, 1819. House 1, that is self-occupied, and let out, which is LOP, which is given. But under LOP, they are giving you the house was vacant. So basically, this is VLOP, okay? And then they are giving you adjustment, dividend received, interest on FD, winning from lottery, and medical insurance paid. So first, we start with the house property part. SOP ka remember up to NAV deductions, okay, standard deduction is nil. Only interest will be considered. Rest, nothing is considered. For LOP, we go as per the rule. So fair rent is 3 lakh, so we take it as 3 lakh. Municipal value 26,000 a month, so 26 into 12 is 3 lakh 12,000. Higher of A and B, so 3 lakh 12 is a higher value, so we take that. Standard rent is not given, so lower of this will be again 3 lakh 12. Actual rent received, now this is VLOP. So 35,000 into 9, because 3 months are vacant, comes to 3 lakh 15. The rule of VLOP is very simple. Whatever is actual will turn out and become GAV, 3 lakh 15. Less municipal tax paid is get municipal tax paid is 15,000. So less 15,000 comes to 3 lakhs. So our NAV is 3 lakhs. Less deduction under section 24, 30% of NAV is 90,000. And interest on SOP and LOP 80,000 and 90,000. So we take 80 and 90. We subtract it, we get the value as negative 80,000 for SOP and 3 lakh minus 1 lakh 80, 1 lakh 20 positive. So my net income bill from house property is 1 lakh 20 minus 80,000, which is 40,000. Okay, that is the first part. Okay, 40,000, that's the first part. Now that was income from house property. Now we need to find income from other source. So we'll continue. So income from house property is 40,000. Income from other source. What all income we have? Dividend from Reliance, interest on FD, winning from lottery. Three things are there. We added up. We get 145. So 40,000 plus 145 comes to 1 lakh 85,000. Next, deduction under chapter 6A. First, repayment of principal 30 and 40, that's 70,000. Medical insurance paid is 15,000. And there's one more which is missed out here, okay? Anjali is 60% disabled, so under 80U, okay, you will get 75,000 more deduction, which has been missed out here. So we'll just add it up here. So 85,000 plus another 75,000. So that comes to 1,60,000. Okay, this is 1,60,000. So 1,85,000 minus 1,60,000. So the net taxable income will turn out to be 25,000. Okay, so this is how you'll have to solve the sum based on house property, other source and deduction, where they are asked you to find total taxable income, or find the net taxable income under the head income from business and profession, other source and deduction. ठीक है चलो, I hope everyone have understood. This was the second sum in this question paper that had to be solved. Next, now this is based on capital gain. Again, a property was purchased for 2,50,000 on 1st October 94. Cannot consider that. The fair market value, yes, we'll consider that. Improvement before 2001 cannot be taken. Rest will be considered. Sold the house for 2 crores. You bought a new house for 65, an investment of 10 lakhs, and transfer amount came to 1 lakh, and these are the respective CIA. So we start with sale consideration. 2 crores minus transfer fees, which was um, 1 lakh, so it came to 1 crore 99 lakhs, less index cost of acquisition. You acquired it for 12 lakh 50 into 280 divided by 100, which came to 35 lakhs. Less index cost of improvement. Three improvements are there: 1 lakh 50, 4 lakhs, and 5 lakh 50 into 280 divided by the respective CIA 148, 240, and 264. So after multiplying and dividing, we get the value 28, 3784, 4,667, and 583333. You minus that from 1 crore 99 lakhs, we got the value as 1 crore 50 lakhs 66,216. From that, less new purchase under section 54, that was 65 lakh a new house, and investment under NHA that comes under section 54E of 10 lakhs. When you subtract both, we get the final answer as 75 lakhs 66,216. So this was the sum which was based on capital gain. Okay, so I hope everyone have understood all the three types of sum that we took in this particular video. Okay, one was based on house property, other source deduction. One was on scope, and the last one what we did was capital gain. So I hope everyone have understood that. There are a few more sum. We'll be taking up that in the next video. So with that, we will be ending this video here. Thank you.